Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Anand Ladha, founder, Invest Aaj for Kal. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Anand, good evening and welcome to the show. Let's begin with our first viewer, who is Surinder Singh, and he's 45 years old from Punjab. He's invested 1,000 rupees in Axis growth opportunity, Canara Robeco small cap, Canara Robeco blue chip, and he wants to know if these funds are good for him. Details are not enough. We really need to know his entire purpose of having this portfolio. But then before I ask you, let's just talk about the returns and the performance of these funds. Axis Growth Opportunity, what kind of a fund it is, and maybe last 5 or 3 years return, what's been the strategy of this particular fund, and how is it performing?
Hi, firstly, good evening, and thank you so much for having me on the show. If we talk about this particular portfolio is decent. Last 3 years return of Axis Growth Opportunity Fund is roughly around 27% if we take it out on a whole. And if we talk about CAGR returns, then also it is comfortable. It's a moderate to aggressive kind of fund. Our main focus in this fund is that we are getting exposure to both large cap and mid cap stocks. So it is a properly good diversified portfolio. If we talk about this particular person, Surinder sir, I think right now he's investing 3,000 rupees per month. The only issue which I am seeing in his portfolio is that even if he is investing for next 20 years, he will be able to get a corpus of roughly around 30 lakh rupees at an expected rate of return of 12%. If we want to increase his corpus, because I think he will be requiring a bigger corpus, we don't have the exact details, but still if we are targeting a bigger corpus, he will need to have step up SIP, or he will eventually have to increase his SIP as and when possible. If we talk about funds are decent. Canara Robo Small Cap Fund of lately has been one of the favorite fund. It has been a 5-star rated fund, performing superbly well. And finally, if we talk about blue chip fund, instead of blue chip fund, he can directly invest in index, because going forward, it will be really difficult for blue chip funds to beat the benchmark, looking at past performance and past data which we have. So I think this is one small change which he can make, that instead of Robeco blue chip fund, he can add a direct Nifty 50 equal weight index fund of any fund house which he likes, and he can probably focus on increasing his SIP eventually.
You say that it's going to be difficult for active blue chip funds to outperform the benchmark?
Because of even if we see past data, we see that a lot of rather majority of the blue chip fund are not able to beat the benchmark or the index. There are two major reasons which we can see. First is the basket is very limited. You have to choose from very selected stock, and in that squeezed basket, it is very difficult to outperform. Plus, at times we see that stock which are heavy weighted in index, for example, Reliance, if that stock outperforms heavily, then it is very difficult, because any which ways, because of restrictions which mutual fund house cannot invest above a particular limit in a particular stock. So they are bound to follow that rule, and they are not able to invest in a particular stock, even if they feel that this particular stock or this particular theme can perform too well. So this is the limitation which we have. So considering the past performances of all the blue chip fund, consensus is that we should focus on index fund instead of investing in blue chip fund.
All right, going ahead, Surinder wants to add any other category fund in his portfolio, maybe increase the investment. Should he be doing in the existing funds that you've recommended, or he can actually add one more fund to his portfolio?
The existing portfolio is decent for a moderate to average risk investor. Only thing which is missing from his portfolio is a debt component or a debt fund. If not debt, at least balance advantage fund. I hope that he's taking care of the debt part by investing in FDs or some sort of debt instrument. So that is missing from his portfolio. Otherwise, I think it is a stable portfolio and a moderate to average risk portfolio.
Anand, we move on. We have Dr. Sridhar's question. He's 35 years old and he has a term plan of 1 crore till the age of 85. He also has a health insurance plan, 10 lakh coverage, and the mutual fund investments are into ICICI Sensex Fund. He's putting up 5,000 SIP there, Kotak Emerging Equity 5,000 SIP, Axis Small Cap Fund 5,000 SIP, Canara Tax Saver Fund 5,000, and in total I think it's 20,000 investment per month that he's doing. And it's a retirement goal for which he's investing, and the time horizon for this goal is 25 years, but we still don't have the entire corpus that he wants to accumulate through this portfolio. Okay. First, I think the term plan is fine. He might want to increase it if there is more financial liability on him. What do you think? Maybe if he has a home loan on him that he might want to cover in his term plan coverage.
Surely he can do that, and he can top it up in his existing plan. That is absolutely okay. And I hope he has taken accidental rider, because majority time if something happens to any human being till the age of 50, it is because of an accident. So accident rider can be added in a term plan. I hope that it is already taken care of, and if it is not, then it is to be taken care of.
And even a critical illness plan will be needed, like a cancer care plan and the other specific disease plans that one needs to take.
Yeah, that is see, two riders are very good, and we should always take riders with term insurance, because term insurance premium is always fixed. If we add any rider with health insurance, premium of health insurance keep on increasing as our age increase. So it is always good to have all the riders added with your term plan. Critical illness and accidental rider are two riders which are actually good and should be added. And since he have a 10 lakh insurance cover, he should ensure that a lot of companies, for example SDFC, give some cashback on submission of regular bills. So he need to ensure that he's taking that cashback. Roughly, it is somewhere around 5,000 rupees per annum, and a lot of people don't know about it. So this is something which he can take care of. This will give him some extra bucks.
To have no idea as to what health insurance plan he has, and also if it is a individual plan or it's a family floater, so no information over there. But then let's quickly get on to his funds. He has an ELSS, a small cap, an index fund. How do you see the mix?
See, before talking about mix, let us talk about the corpus. He can be targeting a corpus of 3 to 3.4 crores. And if we take 6% inflation in mind, then if his present expenditure is somewhere around 43 to 45,000, it will be taken care of by this expenditure and by this investment which he is doing. So he just need to see that is his present expenditure in the range of 43 to 45,000. If yes, then he is good to go. If we talk about funds, fund mix is good, actually good. I think he has already taken an index fund. He's investing in emerging equity fund. He has a small cap fund, and at the same time he has a tax saver fund which is taking care of his ATC reduction. So it's a good mix of fund. There is no need to make a lot of changes or a lot of up and down in his portfolio. Debt is missing again, and I think that he is taking care of this debt part by investing in FDs. I am assuming that part. If not, then he need to add a balance advantage fund in his portfolio so that debt equity mix is proper. And by chance, if there is any correction in the market, he is not maybe he's not nervous by that volatility, and he will be able to ride that volatility properly if he has proper debt in his portfolio.
How much corpus did you say? 3 to 4 crores?
Roughly 3.2 to 3.4 crores.
All right. We really don't have any breakup of the goal that he has aligned. It's just a retirement goal. So we are assuming that this figure looks good to him. But in case if he wants a higher figure, definitely he needs to add more investment, right? And no more funds needed?
Just a BAF if we don't have any debt instrument. Otherwise, we need not do a lot of thing with the portfolio, because he has a small cap, he has a mid cap, he has large cap index fund. So everything is taken care of, and then and a tax saver fund.
We'll take Akshita's question, and she says that she wants to start investing in mutual funds, and she can invest 5 to 10,000 per month. The goal is to save as much as possible for long term, and here she means 10 to 15 years. She wants you to recommend some funds, and the average return that she's expecting is 12 to 15% per year. So that's not a wrong expectation to have, but we don't have her on the phone line. 5 to 10,000. How many funds ideally one should be having?
two funds at max
Okay.
is more than sufficient to start off. And if she's as she rightly mentioned that she's an absolute beginner, so she can start with an index fund, maybe Nifty 50 index fund, and she can have a flexi cap fund to start off. Once she gains some experience of the volatility of the market, then probably she can move towards small cap funds and add those fund also in our portfolio. If we talk about FlexiCap fund, presently I am personally studying and liking DSP FlexiCap fund, and even Kotak FlexiCap fund is good, although uh, it is too big in size now. But still, you can study these two funds to start off. See, whenever we are starting, I think we should start slow and look out for defensive funds. And eventually, once we learn how market volatility work, how market work, then slowly and gradually we can keep on adding some aggressive fund and make our portfolio accordingly.
All right. With 5 to 10,000 per month investment for 10 to 15 years, how much she'll be able to accumulate? Obviously, I mean, if there has to be a goal which needs to be defined in terms of corpus that she wants to collect, but approximately what will be the corpus that she can accumulate?
See, if she is investing 5,000 at 12% expected rate of return for 15 years, then somewhere around 25 lakh of corpus can be accumulated. And if she is investing 10,000, roughly 50 lakh of corpus can be accumulated. I have taken assumption of 12% of expected rate of return on a comfortable, decent side.
Right, we move on to Shalab's question now, and Shalab wants to invest 15,000 per month in mutual funds, has a medium risk appetite, and time horizon is 15 years. Goal is to have 5 crore corpus within that time frame, and also wants to know the ideal SIP amount for this particular goal to achieve the target. Yeah.
See, firstly, there's a very interesting rule of 15, 15, 15. I think that is why he's investing for 15 years, 15,000 rupees per month. And rule says that if you invest 15,000 rupees per month for 15 years at 15% expected rate of return, you will be able to reach a corpus of 1 crore in 15 years. That is the formula, which is quite famous of lately in on Instagram Reels. So I think that is why he has chosen this 15% and 15,000 in 15 years figures. If we talk about logically and conservatively, at 12% expected rate of return, he will be able to reach a corpus of 75 lakh. If we want to reach a corpus of 5 crore at 12% expected rate of return, he need to invest at least 1 lakh rupees per month, or else he will need 30 years with 15,000 rupees investment to reach his goal.
All right, we move on and we'll take Anand's question. Anand is investing 12 to 15,000 in SIP every month and is holding Nippon India Large Cap, SBI Magnum Mid Cap, also Parag Parikh Flexi Cap, and the target is to accumulate 5 crores in 10 to 15 years. He wants to know that the SIP amount is enough to achieve this target and if the funds are right for him.
Almost same calculation which we just discussed. 1 lakh SIP is needed if you want to reach a corpus of 5 crore. I think of lately 5 crore is a fancy figure and everyone want to achieve it. And I'm very happy that at least people are having higher aspirations to reach a bigger goal. And it's absolutely okay. But we need to make sure that we are doing our maths right. We need at least 1 lakh rupees of SIP if we want to reach that goal in 15 years, or else we will at least need 30 years with the same corpus. If we talk about funds, is Parag Parikh Flexi Cap Fund. This is a fund which is too fancy of lately. And I am personally a bit defensive on this fund. And instead of this fund, I feel that better Flexi Cap fund going forward can be there. It's a good fund and it has performed really well. But going forward, because corpus of this fund has increased a lot, I am a bit conservative and I am just keeping a watch on this fund before investing anything further. So that is my personal view. Otherwise, instead of Nippon India Large Cap Fund, I think index, as we discussed already, can do our job. SBI Mid Cap Fund is absolutely okay and can be continued in our portfolio.
So, Anand, what's the larger AUM got to do with the fund performance?
Once AUM is above 15,000 crores, I feel it is really difficult for a fund manager to take an aggressive bet, especially in small cap space, because suppose there is a very small cap company which a fund manager is liking, And if that fund manager is looking to invest just 1% of his total portfolio in that stock, just because that particular fund manager is investing in a very small cap stock, suddenly we'll see a lot of volume, and the impact cost will be very high for that fund manager because of the low volumes which is usually there in small caps. So I feel then off lately we have seen that whenever fund rises above 15,000 crores, major portfolio is by default allocated in large cap because of this cost or this risk which is there of investing in small cap. Also there is this supposedly if I have
But
150
Parag Parikh,
crores
flexi cap so far is a very large cap biased flexi cap. But then, yeah, we get your point. Thank you so much, Anand, for being on the show. And the time is up. Thank you for helping our viewers with their financial portfolio today.
Thank you so much.
We move on. We at the Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda as we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, the global markets, economy, and corporate world. So get ready to catch all the action here on Times Network.